Good morning, my name is Lisa Coven, and did I get my slide? I'm here on behalf of NYSERDA, and I represent their agriculture programs. And they do have quite a variety of different programs. And if you know, a lot of the programs aren't ag specific, but ag can partake in most of the programs. Such as the New York Sun programs, the renewable heat programs, the windmill programs. But what we do offer specifically for ag is we're doing a free energy audit. So we'll come out to a farm. Actually, it's a third party, so they don't have to worry about the government showing up. It's a private engineering firm, New York firm, that shows up. Gives you a rundown of all your stationary equipment, brings you back a report that evaluates you, let you know how energy efficient you are, and whether there's opportunities. And then we do this other really amazing thing that you guys will really like here is we offer technical assistance. I sometimes call myself as a gatekeeper to incentives and money out there. We've gone ahead, and what I didn't see listed in any of this is that believe it or not, the utilities are friends of ag, and I've been working I know it sounds crazy, I've been working really hard to develop these relationships, and we have a lot of support in the major utilities such as National Grid and NYSEG. I believe I'm in NYSEG territory here, if I'm correct. And they do, they're willing to bypass an 800 number and talk to you directly as long as you've come through the program and you've worked with me. So it's a really great opportunity. And they're giving out really great incentives for energy efficiency. And even though I only focus on energy efficiency, you'll know that many of the opportunities here go way beyond energy efficiency, from labor to reducing waste to saving time to maybe finding time to spend with your family. So like I said, I see the program as kind of a gateway to other programs. You can use this program to go to Energize New York and perhaps get some PACE funding. You can use it to go to Farm Credit East to look into loans. You can use it to potentially work with a REAP grant. Lots of opportunities here to open the door.
Okay, and our next panelist is John Fessenden from Farm Credit East.
Yeah. So I'm here today representing Farm Credit East, born and raised in Cayuga County. So I have a definite commitment to agriculture, like Justin mentions. It's part of our culture, it's part of our DNA. Grew up on the family dairy farm in King Ferry, and now I work for Farm Credit East for the past 16 years as a senior loan officer. I cover a lot of the Finger Lakes area, kind of spread out, but a pretty good concentration here in Cayuga County. I know a lot of the connections here, which is typical of Farm Credit, that we are employees that are ingrained in the community. Obviously we do loans, we do leases, we provide a lot of financial services, payroll services, tax services, estate planning, business planning. We have a lot of consultants. I've left some brochures in the back. And so we have some people on staff that work, like myself, just specifically with loans and leases, but I'm also the relationship manager that opens up a whole bunch of other services that we provide, including the consultants. And the consultants have a network throughout the county, throughout the state, working with all of these different agencies to help bring it all together for a farm producer. So we finance agriculture from the production side and anything related to agriculture. So that's kind of our charter. That's where we start. Farm Credit is a cooperative, initially created in 1916 to provide consistent loans and services to agriculture that commercial banks were not able to consistently do. So we've been around a long time. We understand agriculture. We're committed to the highs and lows of agriculture, and working with individual customers to get them through those lean times, which we're kind of experiencing presently. And we'll make reasonable decisions to continue on for both Farm Credit and our customers. So that's a little bit about Farm Credit.
Lynette is from USDA Farm Service Agency.
Correct. Yep. So I'm, as Derek said, Lynette Wright with Farm Service Agency. I believe a couple of my coworkers. I don't need. You can do without it. That's fine.
You sure?
It'll take a little longer. This is fine. So a couple of my coworkers handed out both a map and then some fact sheets about our programs, specifically directed towards funding. So we have 39 offices throughout New York State. One's right here in this building, just down the hall. Krista Terrell's here. She's the county executive director here. So this map will show you, if you're not from Cayuga County, where your local county office is. And then we also have farm loan teams.
Here's this if you want to refer to
Okay.
specific
All
slides.
right. So yeah, we're part of the U.S. Department of Agriculture, and we're the agency that deals directly with farmers. So we implement the Farm Bill. So right now we're kind of waiting for that, but a lot of our programs continue on without the Farm Bills right now. And as I said, we kind of have two sides. So there's our farm program side, which is in all those 39 offices. And that's what's here in Cayuga County. And then we also have a farm loan teams, a farm loan side. And the farm loan teams sit wherever there's a yellow dot. So Cayuga County is covered by our Cortland County office, but actually there's usually a farm loan person in this office as well. And those people in the farm loan teams travel throughout their region. So if you're here, they can come to you. It's not like you have to go to Cortland. So our farm loans, we like to call ourselves America's Lender of First Opportunity. So FSA's loans are designed to help farmers either start, purchase, or expand their farming operation if they can't get credit elsewhere. So we don't want to compete with commercial banks like Farm Credit, but we come in when commercial credit isn't an option. There's several different types of loans for the type of situation, for different types of situations. And we do put special emphasis on providing loans to beginning farmers, as well as what we call targeted underserved communities like women and minorities. And USDA calls a beginning farmer someone who hasn't operated a farm for more than 10 years. And if it's an entity, all the people within that entity have to be beginning farmers, which is different than, like with women, it can be a majority ownership, but for our beginning farmer programs, they do have to all be, the whole entity has to be a beginning farmer to qualify for the beginning farmer programs. Not necessarily, they can still get a loan, just not the beginning farmer loans. Two of our programs I'll mention specifically for beginning farmers. We have the direct down payment farm ownership program. So all of our loans don't require, our farm loans don't require a down payment, but if a farm does have a down payment, they can put down, and they can get, a percentage of the loan covered by a Farm Credit or a commercial bank. And FSA is basically just covering 50% of the loan. We can do this direct down payment farm ownership program where the interest on that FSA portion of the loan will be 1.5%. And then we also have the joint financing program. So maybe a beginning farmer can get a loan from Farm Credit, but they don't have the down payment needed to finish to actually get the loan. They can come to us for just that down payment, and we call that the joint financing. And then the interest rate on that down payment loan will be 2.5%. I'll just quickly go through a couple of our other loans. We have microloans. So these loans are up to $50,000. And these are really popular because it's less paperwork, there's less security requirements, and less experience requirements. Our loans, for the most part, do require that the individual have some sort of experience in farming. But for these loans, we can get them a mentor if they don't have any experience. So we have these for both ownership and operating loans. The operating are 1 to 7 years terms, and ownership for microloans are 25 years. And then we have our traditional direct loans. These go up to $300,000 currently. Again, for operating, it's 1 to 7 years, and the applicant does have to have 2 years of experience farming or managing a farm, not necessarily on their own, but a level of leadership on a farm is needed. And then the farm ownership loans also go up to 300,000 years with terms of 40 years. And they do have to have been operating or had a managing experience on a farm for at least 3 years. We won't talk about this too much, but ours is supervised credit, so we do require record keeping throughout the year, at least annually. We also have a guaranteed program, which we work with Farm Credit a lot with, where the bank is our client, FSA's client, and the farmer is the bank's client. So the farmer gets their loan from the bank at the commercial bank's terms and rates, but we basically are essentially co-signing. We're guaranteeing about 90% of that loan, and we can do that up to just over 1.4%. or 1.4 million. Sorry. Another loan program I'll talk about real quickly is on our farm program side. So these are available here in Cayuga County. In any of the 39 offices, you can apply for this loan. And these are our farm storage facility loans. And these are low interest financing to build or upgrade permanent or portable storage facilities and equipment. And in the last couple of years, the number of eligible commodities has really been greatly expanded. So you can see pretty much most things grown here do qualify for these loans. I won't go through all of them. And the eligible uses, anything you're using to store a product or move that product, like hauling trucks. And this includes refrigerated trucks. So if someone's like going to the farmer's market and needs a refrigerated truck to take their vegetables to the markets, we can do that. So there's a long list of eligible uses of this loan. And like I said, these loans are available to anyone. These are on our farm program side, so they don't have to not be eligible for credit elsewhere. These loans are available to anyone as long as they're producing or farming that eligible commodity. The maximum loan amount is $500,000, but they can make multiple requests, so we can do more than $500,000 per person or per farm. And there is a down payment with these, so we require 15% down for loans over $50,000 and 5% down for loans under $50,000. And you do have to demonstrate the need for the additional storage, so like someone can't build a huge grain bin facility and think they're going to run out space within it. They do have to prove that they need the space they're requesting to build for their own product. Here are the November rates, and I don't think they changed. They just came out this morning, and I don't believe they changed at all. So they're quite competitive, as you can see. And it is a fixed, yep, it is fixed for the life of the loan. And the last program I'll talk about is our marketing assistance loans. These are also called commodity loans. And these are, like right now, if you just are attempting to harvest your corn or soybeans, and you want to store them and wait to sell the crop in the spring when hopefully prices will be higher, you can get a commodity loan on that harvest, and we will give you, FSA can give you money for that crop that you've got in storage. So maybe your fertilizer company says, if you can pay now before the end of the year, we'll give you a 10% discount. This is something you can get that loan, get some money on what you're keeping in storage, and then you can pay off some bills ahead of time. And then in the spring, when you hopefully make more than what your loan is worth, you can come back to us and pay off your loan and sell your crop. And you had some money during the winter while you kept your commodity in storage. Does that make sense? So, okay. And here's some websites if you're interested in more. But that's.
Hi, my name is Steve Davis. I'm with USDA Rural Development. I work pretty much exclusively in business programs, but I'm going to go through what rural development's all about real quick. I had to kind of cut and slash this presentation from 50 slides down to about 20, so hopefully it'll flow okay. But today I'm just going to talk about who is USDA Rural Development and what do we do, where are we located, and also just kind of talk about two business programs that farmers can use, because pretty much FSA is the go-to agency for rural development. I like to say we kind of cover the periphery of what FSA does. We support FSA. So what FSA can't do, we often can do. And we got 11 offices around the state. I'm out of the Canandaigua office, but we cover the entire state. If you have any questions at all about our programs, you can just go online. We do have a resource guide back there, which has our web address on it. But I want to talk about two specific programs today that farmers can use, and that's called our Value Added Producer Grant Program, which is a program where farmers that produce their own commodity, grow their own crop like soybeans or apples or anything like that, can apply for a a planning grant or a working capital grant to enter into value-added processes. So if you want to, like, let's say, turn apple juice or apples into apple juice, that's a value-added process. If you want to, I don't know, turn honey into some kind of candy, that might be a value-added process. But it's got to be an edible commodity, and it's got to be, once it's transformed, it's something that can't be transformed back. So, that you can add value to. It is a match and grant program. So the planning side of it, you can get up to $75,000 in grant to plan an activity, like to make sure it is a feasible activity, or to prepare you to jump into this venture. And then there's also a working capital grant that you might be able to secure later on that allows you to it'll help you when you're entering the process, when you're in the process of making the whatever it might be that you're adding value to. Okay, that slide shows you where we're located, okay, and how we're broke up. So each office represents many different counties, and for business programs, there's only 3 of us that actually run the road, so we cover multiple offices. I cover 3 offices myself. So, but this is the contact information. If you just call a local office, they'll refer you to us if it's our program that you want to talk about. So within business programs, there's 9 different programs available, okay? Only 2 of these programs agriculture producers can qualify for. And that's the value added, which I've already kind of discussed, and then the rural energy programs. I don't think I need to rehash that. So basically that tells you what products are eligible. They have to undergo a change in physical state, was produced in a manner that enhances the value of the commodity, is physically segregated, thus enhanced in value, or is converted to renewable energy sources, or marked as locally produced agricultural foods. So eligible, raw, cooked, processed, edible substances, like I said, for human consumption, and non-eligible is like animal feed, living animals, non-harvested plants, fibers, medical products, cosmetics, tobacco products, and narcotics. There are quite a few different eligible applicants, but the caveat is that you have to produce at least 50% of your own crop that you're going to add the value to. 2 different grants, like I said. These are matching grants too, like, so 50% from your source, 50% from the grant. So on planning activities, feasibility studies, business or marketing plans, legal advice for entity formation. For working capital, it can pay operational costs directly related to the value added. We can't do things like equipment. Okay, so it's really just things that have to do with the operation of your business. Now on to the second grant. The Rural Energy for America grant program. There is a grant component and also a loan component. Okay. So the purpose is to promote the use of renewable energy systems and energy efficiency improvements. So there are 2 different programs within rural energy, and it requires 2 different applications. One is if you want to install an energy system in your business, let's say solar, that's probably 90% of what we see for energy systems that are going to, so it reduces your energy costs. That's an eligible renewable energy system. Or for energy efficiency improvements, if you've got like an extremely inefficient building and you want to upgrade it, or if you've got extremely inefficient equipment and you want to upgrade the equipment, then this, you might be able to qualify for this grant program. One example is Auburn Vacuum Foreman here, if you guys are familiar with that business. They went through the process a couple of years ago and got a grant, a $50,000 grant from us for making their vacuum foreman equipment more energy efficient. and it's worked well. You know, they upgraded a couple of systems there and upgraded a compressor and such, and it's really cut their energy costs quite a bit and made their product. I guess there's a lot less waste in their product now because of the system upgrade. So. But as far as the program itself goes, the maximum grant for the energy system is $500,000. Since we pay up to 25% of total project cost, that means we could have a $2 million project and apply for up to $500,000 grant in the rural energy system. And then the energy efficiency improvements up to $250,000. So that means the project itself can be up to $1 million. And if you get awarded another grant or low interest loan or something like that, we don't reduce the project by whatever that grant might be. So it's total project cost, truly. It is a competitive program, and but I'd say last year we probably funded about 75% of the project applications through that program.
Do you know how many applications were received?
About 70. It's a very popular program in New York. So. And you actually get considered more than once a year if your grant request is under $20,000. So if you have a smaller project for a business that is $80,000 or less, then you'll get considered more than one time each year for the rural energy grant. If it's over $20,000, you get considered one time. So. But it's a great program, very popular. Only serves rural America. That's what we do. We just work in rural areas. So there's a loan component to that too that I didn't discuss. But basically we work with a bank. The bank would be our applicant. We provide a guarantee to a bank if they come to us and say we have this big energy project we want you to fund. Or provide a guarantee on. We can provide up to a 85% guarantee on a loan to a bank that has an applicant, for the rural energy system applicant. So, if you got any questions, Dave Skirmahorn is our program director. I'm in Canandaigua, like I said. You can give me a call anytime. And I'll be happy to help you. If you can't get a hold of me, just call a local office and they'll direct you to the correct person. And that's all I got.
Hi, I'm Tracy Verrier. I'm the Executive Director of the Cayuga Economic Development Agency and the Cayuga County Chamber of Commerce. I also sit on the Central New York Regional Economic Development Council. So I'm wearing a couple hats today, but I think I'm supposed to be focusing on my Regional Economic Development Council hat. I think we'll get into the details of some of the programs as we go through the panel discussion, but generally the Regional Economic Development Council reviews applications that come into the consolidated funding application, which we have a lot of acronyms, so if I use any acronyms that you're not familiar with, please stop me. But the consolidated funding application is a way that the state has streamlined grant applications for programs, and the Regional Economic Development Council accounts for 20% of the score for those programs. So we review those applications, we give it a score on a scale of 20. That goes to the state, and then the state agencies determine how they, the rest of the funding or the rest of the criteria for scoring. And then they determine which projects get funded. Some of the programs that specifically apply to agriculture could be through Empire State Development. Dan Kolinsky is in the room somewhere. Oh, he's back there. He's a part of the Syracuse office that represents the Central New York region. The ESD covers a bunch of different programs. They have some grant funds. They have some tax credit programs. Job creation is typically a big piece of ESD funding. For the Excelsior job programs, agriculture needs to create a minimum of 5 jobs to be eligible for any of the tax credits. The grant funds are a little bit more flexible, but there is often a job creation factor that is considered in the level of funding. So if you are looking at those funds, that's something you want to keep in mind. The grant funds can fund up to 20% of the total project cost. So if you have a large project, it can be significant. but everything pretty much is going to be reimbursement based, so you want to consider the financing of those projects as well. NYSERDA also some of their programs also come through the Regional Economic Development Council, but I won't talk about NYSERDA programs because other people are better suited to do that up here. In addition to the Regional Economic Development Council and in the CFA funding, there are a few programs in the state that may be interesting to this group, including a new New York Grown and Certified program, which helps farms make any adjustments they need to make in order to become eligible for the New York Grown and Certified program. There's also a Global New York program that helps with if you're looking to increase exporting. So we can talk a little bit more about those. Outside of the state level, the state also has a new farmer grant program, so we can talk about that a little bit as well. From the CEDA perspective, from the Economic Development Agency perspective, we do staff a couple of loan programs. The county has a loan program through the Cayuga County Development Corporation that can help with gap financing or financing equipment purchases. And Steve is very involved and Steve Lynch is very involved in those projects. CEDA does the underwriting and helps through the application process, but Steve is also very involved in those loans through the administration and working with the committee. The city has a similar program. I don't think many of you are probably in the city, so I'll steer away from that one. CEDA also has a microloan program. If you have a small project that needs funding, you're probably beyond that level as well. We also staff the Industrial Development Agency, so if you're making some significant investments, there could be some benefits there. So we'll talk more about those as we get through the panel, but a wide array of opportunities.
Thanks. So the first question I'm going to ask is, what's your most popular program for agricultural producers? And we can start with Lisa again.
Well, obviously, our biggest offering here is the free energy audit. So that is our most popular product. The program launched in March of 2016, and today, we're up to like 950 farms have come through the program and either received an energy audit or have already, or are in the process of receiving an energy audit. And believe it or not, we have a really good percentage. About 10% of those folks have already completed installations and are already saving money. So that is our biggest problem. And the really fun thing about this is you actually don't have to fill out a consolidated application. It is the easiest application I've ever seen in my life that can be done online or here with me. No information necessary except for like your name and where you live. So really simple process. We make it very easy.
Obviously, our largest program is loans. So Farm Credit East covers New York State, New Jersey, and essentially all of New England. And we have about $7 billion worth of loans in that territory out of 21 offices. Here in the Finger Lakes, the Geneva office covers Cayuga County. From our office, we have about $650 million of loans. And like I said earlier, we work with farmers and any agricultural related businesses around that. So whether it's a custom spray business or a builder of agricultural buildings or someone that's processing and marketing an agricultural product. So we kind of start with agriculture and we can go to both sides of that. And that's our biggest program. Second biggest would be our financial services department, I guess is what we kind of call it. And that's providing all those services that are so critical to farming and to our customers. And it's kind of one hand helping the other as well. So sometimes we're doing financial services for a client and we discover that they need a loan. And obviously, if we already have a loan relationship, we'll find that financial services are going to help supplement and support that business.
For us, on the farm loan side right now, I would say operating loans are our most popular thing, probably due to the poor agricultural economy. Right now, people are needing money to either refinance or move some debt around or just cover operating expenses. And then on the farm program side, I won't say it's popular, but the thing that's keeping our employees the most busy is the market facilitation program, which is this administration's program to help with the tariff retaliation. So people that produce, or farmers that produce soybeans, corn, dairy, hogs, and cherries. Did I miss anything? Wheat. Can come into their FSA office and report their production, and we will give them a check. But it's not a very big check, so people aren't super popular. It's not popular, but it's what's keeping our people busy.
I would say both of our programs, our value-added producer grant program is oversubscribed. You know, there's more applicants typically than you know, we have funds for, which is good in a way and bad in a way. But we get over 30 applications a year in that program across New York, and so it's a very, very popular program with our ag producers. But our Rural Energy for America program is as well, and if one thing I didn't say, if you're an ag producer, you do qualify for the REAP if you get at least 50% of your income from the farm operation. Okay, so that's where your qualification comes in for that program. But we have you know, solar systems on farms all over New York. It's a very, very popular program with our ag producers too. So both equal.
From the Regional Economic Development Council perspective, we have seen some good success with agricultural projects in the ESD grant funds. If any of you have ever done them, they're a little annoying, but money isn't free. So we have seen some good projects come through that funding source. From a CEDA perspective, I would say it's not necessarily financing related, but a lot of what we do with agricultural businesses that we're talking to is making connections within the community and helping them find efficiencies in their processes and helping them find new resources for their supply chains. So that's can sometimes have a really good sustainability effect for the businesses. Another program that's up and that's new that the county is involved with is PACE. It was mentioned earlier during the introductions. The county did approve PACE financing for energy efficiency and renewable energy projects. There are some specific requirements to access that source of financing, but it essentially allows you to finance some of these projects on your property tax bill as opposed to trying to go out to a bank. The underwriting is different. It's a good opportunity if you're having trouble financing those types of projects, and it's just another tool in the tool belt for you to take advantage of.
Thanks. So next question, give me, if you guys have, I want to know if you have like a specific example of how an agriculture producer or processor has made use of one of your programs.
I'm going to be a little vague. I'm not allowed to talk about who,
Yeah,
what,
yeah.
or what, so I didn't want to bring too many specifics in. But I will say that most of our ag producers are in the energy audit probably once they install and once the energy efficiencies have been identified, their operating costs are reduced by 10 to 20%. And again, that's something to remember. I'm not talking about the waste. So if you redo your lights are like my favorite. It's the easiest payback. It's so simple, and there's so many things that aren't even addressed in the energy audit. You switch out to your LED bulbs. Not only are you saving anywhere from, say, 30 to 75%, depending on what's already there. Those metal halides are ridiculous. But think about how many times that farmer or farm staff have to get on the ladder to change an LED bulb and throw it away. I mean, there's so many side effects that happen with the energy audit and the savings that, besides seeing a substantial dollar amount of reduction in your operating costs, you also have, labor reduction and waste reductions. And hopefully that overlaps to other efficiencies in your system and your processes. But lighting's probably my favorite. The second one that I'll give you as my favorite example of savings is VFDs or any kind of timers that you can put. It's amazing what you can save by just kind of regulating the speeds and the temperatures and the amount of time that something is operating. super simple, and that's a really easy, cheap installation.
So again, maybe not disclosing names or anything, and also not being simple, but I think some of the best things that Farm Credit has done for producers is very complex things, where we get involved with estate planning, succession planning, expansion planning. And so one particular project comes to mind for me that I was very involved in. It took quite a few years. A retiring farmer that had essentially no succession plan, and it's not in this county, but we could do one in this county. There was no succession plan on this particular very profitable farm, and so connections were made, and we brought two different partners together that developed a plan, and so there was a lot of tax planning, a lot of succession planning discussions and structuring as to how to get the deal done. And then on March of 2015, I can remember the closing date actually, all the documents were executed. There were, I think, 5 attorneys in the room, and it went smoothly. And not always happening, but in this particular case, everyone was happy with the outcome. The buyer of the operation was pleased with the purchase price and the quality of the land and the animals, and the seller was glad to be done with it. So it really was a fascinating thing to watch and develop. It took probably, I was working with the retiring farm for probably 10 years saying, you need a plan, you need a plan, you need a plan. And so finally we got it done, and it was a great success story.
The one I wanted to mention, I did a success story on them, so I can mention the name, is Main Street Farms in Cortland, New York. And they actually, the reason I wanted to bring it up is it goes along with the Empire State Development Beginning Farmer Grant. And people always call us thinking we have grants. Farm Service Agency does not have any grants. But the grants that are out there, like the Beginning Farmer one, do require matching funds. And so this farm in particular used a microloan from us to have their matching funds for the Beginning Farmer loan. So they were able to build some high tunnels. I couldn't think of the name there. High tunnels and an aquaponics operation, and they've continued to grow since that original Beginning Farmer loan and their beginning micro loans from us, and now have at least 100-acre vegetable farm, diversified vegetable and CSA, and they're doing really well. And they used that micro loan to get started and use their matching funds and have continued to grow.
I can use names because these grants are public information. So one success story in our value-added program was Red Jacket, apple orchard over here in Geneva. They came to us twice, one for a planning grant and then one for a working capital grant. And the planning grant was in preparation for their just a feasibility study and so forth to find out if it would be feasible to start their own juice line. And the second grant was for working capital to allow them to get their operation up and going. And I'm sure you've all seen their products in local stores, so it's a pretty successful business. And then in the energy side, I pointed out Auburn Vacuum Foreman already, and their grant is still open. They're still working on it, and but they've been already seen success with the energy savings and what they've done. And I want to mention too, on the farm side, if you have a maple syrup operation or maple sugar operation, they're very popular with our rural energy program because you can show so much savings in, like if you add an RO, reverse osmosis unit to your operation, that just saves so much energy and boiling the sap down to the syrup, so you can show huge energy savings, or putting in a more energy efficient evaporator, so we can participate with those. So you wouldn't always think of that. Farmers often have their sugar bush, to help supplement their income. So if you do have a sugar bush, or somebody that does, have them check into this program if they want to update their equipment.
From an Empire State Development perspective, one of the big success stories here locally has been Cayuga Milk Ingredients. They did take advantage of ESD grant funds and some Excelsior job credit tax credits. So I don't think I need to tell their story too extensively, but they are a cooperative of farms that are processing milk into primarily powder, but there are some other products that come off of that line, and it's creating an output for these dairy farms for their product, other than the liquid milk avenue. So that was a big success. They employ over 70 people at this point, and is creating a lot of ancillary benefits in the community. I guess the easiest way to talk about CEDA is to give a somewhat non-specific example, but in the southern part of the county, there's an organization that takes a byproduct from, I'm stealing one of Maureen's examples. There's a company that takes a byproduct from a dairy industry, processes it into a commercially viable product. One of their byproducts is then clean water, so Maureen connected them to another company that needs clean water. So that reduces the waste stream for the company that's taking the dairy product and processing it, and then it also creates a supply of fresh water for the company that needs it for a fish operation. So there's those types of connections help to create more sustainability within these businesses. We also helped the producer explore financing options and made sure they were looking at options like SBA financing through their bank, like a 7A loan program, or the 7A program. So that tends to work out well too, making sure that people are considering all of their financing options and they're exploring opportunities that they might already have through their bank, and the SBA or USDA through guarantees or shared financing opportunities. So that's kind of what we're here to do, is lay out those options and make sure that people are considering what might be the best for their particular project.
Okay, I think some of you might have already answered this question, but what's the first step for someone wanting to make use of one of your programs?
It's pretty simple. Just call the 800 number, and we'll walk you through it. Or visit the website and fill out the application, and you'll probably get a phone call from us within 24 to 48 hours.
Yeah, pretty similar. Making contact in an application process. And I think later on we talk about business plans.
Yes.
Yeah. Okay. So obviously, if a business plan has been prepared, that's critical to the application, and just starting the conversation. Yeah.
Yeah, if they're already farming, definitely just coming into their local FSA office and talking to someone at the counter can tell them all the different programs that would be available to them in their area. One thing we get a lot, and I'm sure others here get this too, but a lot of people want to be a farmer, but they don't know what type of farmer they want to be. So definitely if they're at that stage, we would direct them, to like a Cornell Cooperative Extension or someone that can help them kind of narrow down what they want to do and get that business plan going. Because for us to help them, we need to know what they want to do besides just farming in general.
Yeah, just contact one of our local offices. They'll direct you to the right person. You can also go online. We have a pretty good website online where you can kind of wade through everything and check out the different programs. It's a very good resource, and you'll submit your application through one of us, and it's a pretty easy process to get the applications. The applications are fairly extensive and can take some time, so definitely it's to your benefit to contact us earlier, rather than later.
Ditto. Call the office, fill out the form on our website, send an email. Really that first step is talking to either Maureen or Derek, depending on what you're looking to do. Derek does have he was an agricultural economic development specialist for Cornell Cooperative Extension before he joined us, so he does have a background with agriculture and economic development for agricultural projects. And then Maureen is very familiar with some of these larger incentives and opportunities for job creating projects and for making connections. So really that first step is having a conversation and seeing how we can connect you with the right resources. And sometimes that's going to be referring you to some of these folks.
So many of you have talked a lot about what you can do, and it's primarily focused on larger operations. Do you have programs that are specifically targeted towards smaller farms?
Well, I just wanted to be really clear that we don't discriminate against small farms in my program. We don't have a minimum energy usage. We actually pretty much use the USDA definition of a farm, which means that you have to produce $1,000 annually on your property, which is super awesome. So if you are a horse stable renting out some horse stalls, you'll probably qualify. Any size maple operation will qualify. You got some goats, you're a beginner farmer, you have a really small operation, you're starting with some chickens, that's great. We don't discriminate. We'll take any size farm.
Yeah, and similar for farm credit, we do a lot of large loans and large relationships, but we also have a lot of good young beginning small farm programs. So when we have a YBS, young beginning small farmer, come in, they can qualify for some discounts on appraisal, tax services, different things like that. We can work with some of these other agencies. If we're going to do a guarantee, we help with the beginning farmer loan program where they're getting the down payment from FSA and then we do the rest of the loan. We help them with that application, walk them through all those sometimes complicated scenarios and explaining the programs. But yeah, we have loans of all sizes and work with all size farms.
Yeah, the same. We don't discriminate against small farms. So any size farm, actually, we're kind of working a lot with urban agriculture right now. So like I just went and visited a urban farm in Buffalo that, you know, is on or 3/4 of an acre of land in downtown Buffalo, you know, doing diversified vegetables, and they got a microloan from us. So probably microloans are more popular with the smaller farmers. As just mentioned, our loans are a little complicated. That's true. You're getting money from the government, so it's not going to be the easiest process, but the microloans is a simplified process, so it is a little easier than our larger loans. So that makes them quite popular with our smaller farmers. But yeah, any size farm, we can work with them.
For the most part, we can work with any size farm. When you get into our rural energy program, it actually benefits you to be a smaller farm. We go by SBA size standards for you to qualify for that program. So if you're actually have too much revenue, you won't qualify for our rural energy program. And also, like I said earlier, if your grant request is under 20,000, then you actually get more points in our scoring system, and you qualify for consideration more than one time a year. So it does benefit you actually to be a smaller farmer in that regard. And then our value added program, well, both programs, I say, you have to be in a rural area. So that's where we have to discriminate. If you're not in a rural area, we can't work with you. So and the rural definition is 50,000 or less population.
So all of Cayuga County counts as a rural area?
They do.
So ESD, I mentioned earlier, has a new farmer grant program. Essentially, the farmers need to have been in business less than 10 years. They have to be in the first 10 years of their operation, and they do have to, in the most recent tax returns, have at least $10,000 of income from sales. But that program can offer between $15,000 and $50,000 in grant funds. It's a 50% match, so it's dollar for dollar. And then it's to do certain things like expanding their production or advancing their technology. ESD grant funds could be an option depending on the project. We have had some smaller farms apply. Generally, you're going to want a sizable project to make that funding source worthwhile. So if you have a $20,000 project, you're probably not going to want to apply for 20% of that $20,000 from ESD. But as those numbers get bigger, it becomes a more viable option. CEDA also provides business planning assistance. So if you're a new farm or a small farm and could use some help with a business plan or a marketing plan, CEDA can assist with that. And some of these other programs will apply for smaller farms, like the New York Farm Certified. It would work for smaller farms as well. So we also don't discriminate. We'll talk to anybody and try to connect them with the right resources.
Okay, this next question is mostly for John Fessenden, but I'm going to open it up to everyone because it might be relevant to your programs too. What type of business planning is necessary for a company to successfully apply for a grant or a loan from your organization?
There is no business planning necessary. Actually, what I like to tell folks is that the free, I haven't mentioned this before, this is a free, absolutely no cost incurred to the farmer, no passing the money back and forth to the farmer, the farmer never sees a bill. But an energy audit, because it inventories all your stationary equipment, folks love that for business planning. Great for insurance, great for understanding how you're going to develop and grow. You need to have an operation equipment plan, what needs to be replaced down the road. It's a fantastic tool for business planning.
So business plans, I have learned over the years working with all sorts of different customers as they come in, it can be quite comical at times. Like Lynette said, someone coming in just say, I want to be a farmer. Well, that's not much of a business plan. And so the way I kind of try to lead people through that thought process is to say, the business plan is for you. It's not for me as the lender. I want the business plan to be your homework, your research paper to convince you that this idea is going to work. And so I usually throw it back at the applicant or the person I'm discussing things with and say, hey, this is for you. I want you to take ownership of the numbers, the marketing research, how you're going to get it done, do all the research, and once you're convinced, then present that to me, and then your job is to convince me that you've done a good job with your research paper. And if they can do that, then I'm willing to talk to them. But when they come in and just flop down this thing that they kind of copied and cut and pasted offline, and they're like, well, what do you think? I'm like, well, what do you think? Is it going to work? This is your money. You're just borrowing it from me. I'm going to get my 6 or 7% rate of return on whatever Farm Credit puts in. But how confident do you feel that this business plan is going to work? And so that's what I like to see happen. Is a business plan required for a loan from Farm Credit? Not at all. But a new startup, it certainly helps convince me that the applicant has already convinced themselves.
What he said. Yeah, we don't require a business plan either, but we do need to have an income and loss actual, an income and loss projection. But yeah, the business plan definitely helps, convince the person themselves that what they're doing is going to be worthwhile and can help, that farm loan officer convince them that it's going to work as well. So it's not needed, but it's definitely a good thing to have.
And one thing I would just add is when you're talking to farmers are great producers of product. They suck at marketing. All right? And so that's probably the biggest nugget of a business plan is how are you going to sell your product? That's what I think has to have the most development and most understanding.
We don't really require a business program or a business plan in most of our programs, but in our guarantee programs we definitely do, and we work closely with the bank to make sure that the customer does have a good sound business plan in place. If they haven't thought it out well, we'll often refer them to the Small Business Development Center, to assist them in coming up with a good business plan. And for some of these programs, we also require feasibility studies, and most we require environmental studies. Some a minimum of a level 1 environmental assessment. There's a lot of planning that goes into some of our programs. That's why it's important to reach out to us and find out what our requirements are for each program, and and kind of embrace those and make sure that you understand the process. And when you get into like our Rural Energy for America program, we rely a lot on NYSERDA actually. If the producer is good with NYSERDA, then we pretty much accept them. Like the contractor they're using or something like that. So, but it is important to have a business plan in place, even if it's not required sometimes, just to make sure you know what you're doing.
So, as you can tell, this varies widely across programs. We encourage, especially startups, to have business plans. It is required for some of the loan programs that if it's a startup, it's required to have a business plan for some of the loan programs. It's also incredibly helpful in applying for other programs. So, for instance, ESD grant funds, if you have a business plan, pretty much your entire application is there in your business plan, and you're just copying and pasting into the application. It's also really important for even existing businesses that are starting a new product line. So we do a lot of work with businesses to develop business plans. Our staff in-house does it or assists with that. We also make referrals to SCORE and the Small Business Development Center, which both have office or use office space in our building. So we really encourage that type of planning to, again, kind of vet out the idea, make sure everyone's comfortable with what the project is, and then it lays the groundwork for just about everything else that comes after that. You've got the information there when a funder is asking you questions. You've got the information there when you're filling out an application, and you yourself are confident in that information. So we like to encourage business plans, and sometimes it is required. So.
Okay, the next couple questions are just for John from Farm Credit. What makes Farm Credit different from other lenders?
Well, so Derek asked for questions specific, and I guess I provided a couple, but just to be clear about that. Farm Credit, I mentioned in the opening, is truly a cooperative. So Farm Credit East is owned by the borrowers of Farm Credit, so I think that makes us very unique. And that's one of the reasons I worked for Farm Credit, because I was a borrower for quite a few years, and when I decided to leave the home farm, my loan officer said, come work for us. I didn't want to at first, but that's where I ended up, and I took it as a temporary job 16 years ago. But anyway, I really believe in the cooperative mentality. I think it has tremendous advantage for the borrowers. We actually give back a patronage refund, which is our profits that we generate each year. We like to generate a profit because that gives us a really good price advantage with our funder, which is CoBank, and CoBank is getting it from the funding corporation, which is selling federally backed farm credit bonds on the market. So that's where we get our money. It comes down through, we sift through applicants and decide who qualifies to get our low interest loans, basically. They're not as low as some FSA and USDA loans, but we are very efficient with our money. We don't do consumer purpose small loans like snowmobiles and automobiles and things like that. We do house loans, rural house loans. So that's our consumer purpose division called Country Living. So we're efficient with our money. We have a cost of about 85 cents per $100 of loan money going out the door. And as we make money, we're giving back a patronage refund each year. So when I talk about a 6 or 7% interest rate is typically where we're at right about now. Each year for the last 20 years, we've given back a cash distribution of profits called the patronage refund, and that effectively lowers the interest rate about 1%. So that's what's unique about Farm Credit. I also feel like we're unique because it is people in the community, it's people that have grown up in agriculture that are employed by Farm Credit, so we understand what is going on with our customer. We have very few offices across a 7-state area because we're on the road. We meet at the kitchen table or in the barn, filling out paperwork on the bulk tank or wherever. So It's a unique lender, definitely relationship lending. We want to know everything about the family and what's going on and be there to help support that.
Okay, and the next question.
Sorry about the marketing.
Does Farm Credit work with other institutions or agencies with the borrower if it's necessary to get the operation off the ground?
Yeah, so that was pretty obvious here. I know these people, I've worked with these people. One of my other titles that I have with Farm Credit East is I'm the unofficial liaison between Farm Credit East and FSA. So I get to have a couple meetings a year with the state director and some other FSA people, just to make sure we're on the same page. We have a lot of guaranteed loans with FSA. We pride ourselves in working closely with them and understanding what they need, and hopefully they understand what we need so that we can continue that relationship.